Welcome everybody to the most anticipated call of 2024. This is the tax season secrets presented by UMortgage, and we're going to try to help you out today. And I want to introduce myself first, and then we'll pass it along to Gil. But my name is Ben Bell, and I'm a producing branch manager in the Atlanta market, and I've been producing loans since 2011. And have a vast knowledge of real estate and what it takes to, plan out your taxes. I look at tax returns all the time for real estate people who are looking to either purchase a primary home or investment property, second home. There's so many different avenues to it. So I'm joined by our CFO, Gil. So I'm gonna let Gil intro himself, and then we'll get into the slides.
Thanks, Ben. Welcome, everyone. Thanks for joining us today. My name is Gil Arbitsman. I'm the CFO here at UMortgage. My career has spanned all areas of finance. I started my career at Deloitte, financial instrument valuation and securitization. Then I worked on Wall Street in investment banking before entering the mortgage space. I'm not a CPA by trade, but have definitely seen it all over the years, and we're hoping that you can both learn a lot in this session and also definitely get some ideas to discuss with your CPA as you work on your 2023 tax returns and also on your planning for 2024 and beyond.
Yeah, that's awesome. I'm glad you said that. So today's call is based on what we see, but we still recommend you taking what you learned today back to your CPA or somebody you know and trust who's doing your taxes and ask them what you should do. We're going to tell and show what we see on a daily basis and what we think is great for real estate agents when they're filing their taxes. So let's get into the slides and kind of talk about what we're going to be talking about. So Gil, you want to talk about this first part?
Yeah, I don't think this slide's going to surprise anybody, but the average taxpayer pays a lot in taxes in their lifetime. For most, it's their largest expense in their lifetime. And, it being January, that resets the clock for most Americans as they work the first third of the year just to cover what will eventually be their tax bill for the year. This is not something to be taken lightly. And as a W-2 employee myself, a lot of what we're going to go over here today, I'm a bit envious of. Most of the audience are real estate agents and others working as 1099 contractors. The tax code is complex, but full of opportunity for contract workers like those being compensated on a 1099 basis. So I don't think it's avoidable that we're all gonna pay a lot of taxes in our lifetime, but through the help of a CPA, you can optimize your tax strategy and at least minimize what you end up paying to Uncle Sam.
Yeah, for sure. I'd do anything in the world to be a 1099 employee. Oh man. So taxes for realtors.
We'll dive right in. So as most of you know, realtors are self-employed taxpayers. They're treated like their own little small business according to the tax code. So that means you can claim your business expenses against your income on Schedule C. Still required and subject to pay self-employment tax. But again, there's a lot of tools in the tool belt to minimize that tax liability. One thing to note, just because you don't get your 1099 until the end of the year does not necessarily mean you don't owe any taxes until the end of the year. So if you're new to the industry or new to being a contractor, I encourage you to discuss with your CPA the concept of paying estimated taxes during the year to avoid any interest or penalties from the IRS.
For sure. And if you're looking for a good CPA, get with your UMortgage loan officer that you work with who invited you to this presentation today. And he or she can give you recommendations for a CPA that they work with or that they know and trust as well. So very important that you find somebody you know and trust to file your taxes.
Yep. Yeah. So just to go over those self-employment taxes, a lot of this is similar to what I see at the corporate level. Obviously, the Social Security tax and Medicare tax. So for our employees like Ben, obviously, half is owed by the company and half is owed by the employee. So you, as a self-employed contractor, are responsible for both sides. And of course, Social Security caps out at a certain income level. For 2024, that's going to be $168,000. So these are the taxes that, on a gross basis, you're responsible for. How can you offset this through the various legal strategies that are available, as made available by the IRS? So the next slide will discuss how to avoid those Social Security and Medicare taxes. So of course, everything we're going to discuss here and everything you'll discuss for the CPA, these are legal loophole. I mean, they're kind of loopholes, but they are legal, and it is complex, and that's why we always recommend leveraging a seasoned expert to make sure you're doing it the right way. That brings up another myth that I think is important to talk about, and that's the myth that 1099 employees get audited at a higher rate than W-2 earners. That's actually not true. Now, them being complex, the IRS will scrutinize a lot of the sort of tax reduction strategies that we're going to talk about today. But if you zoom out, there's no higher level of audit for 1099 employees. So as long as you're doing everything correctly, navigating the waters above board, you should have no reason to expect a higher rate of audit. One other way of avoiding these taxes is through passive income. So passive income is taxed at the capital gains rates. So you are not subject to these payroll taxes. There's also S corporations. That's just a tax election that passes profits through to a beneficiary, but that one's pretty complex and doesn't always work, especially when it comes to real estate. So ask your CPA for more details there. And then everybody's favorite way of avoiding these taxes is by investing in real estate. I think everybody here makes a living in the real estate industry, so I don't think I need to twist any arms as far as to get you to believe in the long-term appreciation and the value of the asset that real estate can provide. But we'll get into it later in this presentation on how that can help you from a tax standpoint.
100%. Self-employed tax credit.
Yeah, so this is an interesting one. One of many sort of new aspects that I wanted to touch on. I think it's important sometimes if you're a couple of years or a decade into your career, and also if your CPA is sort of running on autopilot when they're doing your return, you might just get comfortable and not always keep your eye out for new legislation. But it's important to stay abreast of all the changes every year, or at least have a CPA who is, or at least have a CPA who subscribes to some periodical that alerts them of changes, because this is a pretty big one that came out of the COVID-19 pandemic. So to boil it down, I don't think a lot of people on this call will be eligible for it, but those who are may save a lot on taxes. So to boil it down, if you had your business interrupted as a result of COVID-19, and that's a pretty broad definition, and I'll touch on that in a second, you're eligible for this self-employed tax credit, and you would get that by, if you're eligible, by amending either your 2020 or 2021 tax return. So this doesn't necessarily mean that you had to have COVID-19. You're also eligible if your business was disrupted, supporting a spouse or a dependent. And I'm sure there's, it's a very, very long piece of legislation. So get with your CPA if you had any sort of business disruption. to see if you're eligible for this. And then obviously there's a lot more research to be done if you are, and then it might be worth it for you to do the amendment. But one other reason, as Ben mentioned, how important it is to get with your local CPA. And if you don't have a local CPA, to reach out to your trusted UMortgage loan originator for a reference for one. Is I'm mostly covering federal tax legislation. There's a lot of state level changes that occurred after the COVID-19 pandemic that your local CPA will have a better grasp on than talking to a CFO of a company headquartered in Philadelphia.
I had no idea about the self-employment tax credit until you pointed it out the other day. I think this is really good.
Yeah, and I think one thing that people get surprised by, I'm not specifically to that tax credit, but just a lot of the pandemic response legislation, is you always think, oh, that doesn't apply to me. Like you think, oh, well, like, I worked in 2020, I worked in 2021. Or some people say, I had my best year in 2021. How could I possibly be eligible for this this thing? But when you read those legislation, or when your CPA has a true grasp on it, you find out that it's not about, did you make less money than the year before? Did you make less money than the last couple of years on average? It's, was your business disrupted? And then some of these things, you could make more money or the most money you've made in your career and still be eligible. So that's definitely a good one when you have that intake meeting with your CPA.
For sure. What about deductible expenses?
Yeah, so this is sort of the bread and butter of being a contractor. So there's pros and cons. Ben is yearning for the days where he can work on a 1099 basis. There's some benefits to being a W-2 employee, but I would say deductible expenses is probably the biggest one here. And the IRS is clear that it must be ordinary, necessary, and reasonable. And I think anyone who's filed a self-employed tax return understands the sort of hurdle that you need to get over, that your CPA will usually question to make sure that they're ordinary, necessary, and reasonable. So I think it's helpful to just think about examples here. So obviously, like real estate agents having subscriptions for certain market data. So if you are like an MMI user, that's an ordinary expense. I think it's pretty obvious that you would need that to do your job as a realtor. On the flip side, you have membership dues for a wine club. Networking is important in this industry, but I think the IRS would say that's not an ordinary expense. So you have to be careful there. And then on a necessary test, I think, using a vehicle for business purposes, I think that's completely necessary as you're going from house to house. Having maybe a luxury McLaren or Porsche to do that job might not be deemed necessary to do that job. So that's just another example that you want to be careful about with the IRS. And then lastly, reasonable, that's similar. You want to buy a drone for $200-300 to help with some videos for your listings. I think that's a reasonable expense. If you buy the $10,000, Boeing drone, that does way more than you would ever need for business purposes, I think the IRS might find that to be unreasonable. So as you think about what expenses to incur, what expenses to deduct against your income, these are some important tests to keep in mind, because this is how the IRS looks at it.
That's awesome. Oh yeah, and get a good bookkeeper. So if you're doing it yourself, make sure you're saving, your receipts for all this stuff, and put it in some sort of bookkeeping model to where you have easy access to it and it's clean for your CPA to read. So when they are preparing your taxes, they know exactly where it falls.
Yeah, and I think you like CPAs work on the garbage in, garbage out concept. So if you come up to them, 2 weeks before the tax filing deadline, and you just throw a box of receipts on their desk. Either they're not going to do a great job or they're going to charge you a lot more. So I think the more organized you are during the year, and there's so much software out there, some of it is even free or freemium, you know, you really have no excuse. You can get an iPhone app where you just snap a picture. Technology has made it so easy, and I think that the better you are at keeping up with tracking it during the year, either yourself or by using a bookkeeper, I think it's just going to make your year-end tax filing process a lot more smooth, and in the end, limit your audit risk and save you the most on taxes.
100%. So, I mean, talk about apps. Like my wife's a real estate agent, and for mileage, you know, she's writing off all her mileage for business, right? Well, she has an app. She turns it on when she leaves the house. If she's going to a showing or wherever, it tracks all the mileage, and then at the end of the month, it spits out all the data for her, and she adds it to the spreadsheet, and then she gets a yearly summary to make sure it matches up. So there's so much technology out there to help you track all of your expenses. So great point there.
Yeah, you got the slides all flip-flop. I got the vehicle one next, but it's all right, Ben. I'll give you a pass. So let's talk home office. So you can claim a partial deduction for some of your home office expenses. The IRS is pretty clear regulation on, you know, it has to be your principal place of business. And then they give you a couple methods to use, either the standard method or the actual method. This is a big one. And Ben is sitting in his home office right now, and as a W-2 employee, unable to, you know, deduct a lot of his expenses that he's incurring. So those of you on this call who work as contractors, you have this available at your disposal. Then similarly on the next slide, the mileage. I mean, mileage is huge as a real estate professional. And I know Ben probably doesn't want to plug the app that his wife is using. We don't have any sponsors for this presentation. Right. So I guess I shouldn't either, but a quick Google search can find several out there. I think some you can even set automatically, so you don't even have to start each trip because you just pre-program where your place of business is. So the IRS does not allow you to deduct commuting expenses. So it can automatically exclude trips from your home to your office, and then it knows every other trip is business related. So again, technology, pretty fantastic. The apps all have the updated IRS, you know, deduction allowable amounts to 67 cents per mile. So I think getting one of those apps is the best bet. What's that?
64 cents is big this year.
Yeah, I think it's 67. I think it's 63 last year.
I'm sorry. Yeah, sorry, 67. Yeah, that's big.
Yeah, it adds up. And as someone who has tried to do the actual method, just do the standard method. You have to find all your muffler bills and all that to do the actual method. So that would be my recommendation. So another big myth for 1099 workers is that you can't take advantage of retirement planning. Couldn't be further from the truth. In fact, I think you have more flexibility and more options as a contract worker than you would as a W-2 employee. You see here, we've got the menu of plans. You can do the solo 401k, SEP IRA is a very popular one. Roth, similar, just using after-tax dollars, and then the simple plan, which you can Google, but another option out there. So go ahead, man.
Gil, real quick. Do you have, for the solo K, do you have to, that has to be under an S corp, right? And you have to pay yourself through like a W-2 payroll? That's just how my wife has it set up. So I don't know. Is that?
I don't believe there's a requirement for S corp, no. Okay. But what you see here, that contribution limit, I mean, for you, Ben, you know, that's way higher than the 23,000 you're eligible for as a W-2 employee. So what that represents is a combination of the employee contribution. So you're the employee of your entity if you're operating as an LLC or whatever, and then you can have an employer match. And then the combination of those two, the employer match is a percentage of earnings, but the two combined can't exceed the total contribution limit, which has not been defined for 2024 as far as I can find in my research, but a lot of people out there are estimating 69,000. So that's a very significant limit. And obviously there's always changes if you're over a certain age. So, do your research, but keep in mind that the sort of tax advantages of long-term retirement planning are available to contractors compensated on a 1099 basis.
Awesome.
Okay, this is the best part because I know a producing branch manager at UMortgage who just closed on another investment property in the last month. His name is Ben Bell. So
What?
I'm going to let you talk now. Like, tell me, you're an expert at loan origination, and yet you're taking the time out to invest in real estate yourself. Tell us about your why you got into it and how you see it playing into your long-term strategy.
I guess when I look at, real estate and just the potential growth in real estate, why, if you have the money to put down, it's not really doing a whole lot of good in the bank right now. I'm a big believer of investing into something that I love, real estate, right? And so I want to own it. My goal is to own 10 properties free and clear, so I don't have to worry about Social Security or any other investments that I have, because those things are going to pay me very well. And if you have good renters in there and they're paying that mortgage for you, it's just a win-win, especially when we're talking about appreciation in the metro Atlanta area. I mean, it's huge. And not only that, the tax benefits of owning real estate with depreciation and cost segmentation, and there's so many different avenues for tax strategies. Again, get with your CPA on all this, but owning real estate as an investment has been probably one of the greatest things that Mindy and I have done in our lifetime. So we're up to 5 properties right now. One of them is a short-term Airbnb, which is awesome. It's in the North Georgia mountains, and that one does very well. The rest of them are all short-term, but anyways, those are all very well for tax strategy and income producing properties for us for long-term.
Yeah, and I, not the topic for the day, but I think when you were making those investment decisions, I think the financing options you had, given the suite of investors and products that UMortgage offers,
right?
I mean, it wasn't just lender of last resort type thing to get financing on a house in the mountains, non-owner occupied. You had like several products from several lenders to choose from. 100%. So any of you on this call, if you have an investment portfolio, if you're looking to start one, talk to your UMortgage Loan Originator, and we have a wealth of knowledge in our organization, not just on primary residences, but on investment properties as well. But
yeah, investment properties.
That plug is over.
Yeah, and second homes, but yeah, again, as Gil said, there's so many loan options out there, even on the conventional side to even non-QM if we have to go down that hole as well. So there's so many options. So definitely, as Gil said, get with your UMortgage loan officer.
So yeah, so just more benefits as we talked about. It's passive gains, so tax at the capital gains rate, and obviously no employment taxes on that income. And then on the next slide, the good thing about investing in real estate as a tax strategy is you can have the gains be passive when you need them to be, and non-passive when that suits you as well. So you talk about mom and pop loophole and the real estate professional status. So what that does there is it allows you to treat rental income or rental losses as active losses. And that means that you can offset your day job earnings by the losses on your investment portfolio. And through various tactics, like Ben mentioned, depreciation and other strategies, you can have a cash flow positive rental property showing a tax loss, and you offset your ordinary income against that. that's really the sweet spot. So again, talk to your CPA about strategies like that, but the purpose here is really just to highlight real estate as one of the best tools to offset your earned income.
Yeah, for sure.
So let's go to the next slide. And what does it mean to have a real estate professional status? I've talked about this to a lot of people. I think that everyone on this call, this is going to be the easiest one to hit because this is what you do for a living. But the IRS has certain standards based on number of hours that you spend working in real estate. So a little bit harder for your average accountant out there who's investing in real estate on the side to justify that he's a professional in real estate. If you're a mortgage loan originator or a real estate agent, I think it's a lot easier to justify. But just pointing out here that's a requirement to treat it as non-passive income.
Got it.
You can go to the next slide. Yeah, so I don't think we need to dwell too much on this. There's 7 different tests. You just have to pass one of them. Again, if you're a realtor, it shouldn't be too hard. And then the tax code does treat short-term rentals a little bit differently. So if you are going to go the Airbnb route, just make sure you're fully transparent with your CPA on your rental property investment portfolio, whether things are leased out, 1 year at a time, or if they are short-term properties. And then, I'm not going to go too far into some of these, but 1031 is a great opportunity, especially if you're in that sort of fix and flip realm of real estate investing. Again, that just allows you to roll your capital gains into a new investment. So if you are buying and selling more frequently than the sort of buy and hold strategy that Ben is employing, I encourage you to discuss the 1031 exchange concept with your CPA. And then if you happen to live in or near opportunity zones, there's some tax advantages there that are designed to incentivize investment in specific areas. And then, of course, this concept of step up in basis. So buy, borrow, die. Buy meaning long-term investment strategy. Borrow meaning you can tap into the price appreciation of your real estate holdings without initiating a taxable event. Like if you were to sell it, to liquidate it, now you have the tax liability. But if you borrow against it, you're able to tap into that liquidity without owing the taxes. And then grim, but when you die, the basis is stepped up. So your heirs have a higher cost basis, which reduces their tax liability. So again, real estate is a great tool for long-term planning and succession planning as well. So again, Ben, I don't know if you've ever refied one of your investment properties, but UMortgage has plenty of products for that too. So this is something where, the real pros, we have one LO who really does this for himself and his customers, but just kind of leveraging the equity in one property to buy the next property. And I think that financing as a tool is a really great way to build wealth and really expand your portfolio.
100%.
I think that's the only slide. Yep, that's the last slide on the real estate. So again, I appreciate everyone joining. And hopefully you found this very insightful. Hopefully we're leaving you with a few nuggets that you could bring to your local CPA to flesh those out and see how they fit into your unique situation. Any questions you have, just again, if you reach out to your UMortgage Loan Originator, they'll probably find a local CPA who can answer that question in a way that's more tailored than Ben or I can answer for you. But I encourage you guys to, and Ben, any parting words from you?
No, you did a great job. Thank you for taking the time to present today. If you need a copy of the slide deck, I'm sure your loan officer at UMortgage can send this out to you, but just, I think we did a good job today, and I really hope you enjoyed it. And, again, as Gil said, find that local CPA. They can run even deeper into this for you to make sure that you're set up for your taxes moving forward. But other than that, you guys have a great day, and we really appreciate you guys getting on this call today.